It is 8 8:30. Okay? On time. Thank you. Thank you. Thank you. Thank you. Welcome to the Fintech Frenzy live stream today, guys. This is a very, very exciting one because finally, we actually saw some pops in stocks that I've actually put some money into, and I'm up right now. So it's a good feeling for sure, but we'll talk about it. Today was a busy day. Started out in the pre-market or whatever. Shift 4 just presented earnings, and I mean, I got to tell you guys, this might be one of the most impressive payment companies I've ever seen. It gives me new vibes all over. Okay, their stock-based compensation, their growth rates, their ability to own the market where others can't, expanding margins when others can't. Unbelievable dominant force. Yeah, very, very interested to learn more about that company. Shift 4, I think, ran up today, like 10% or something. Here, let me bring up their actual price. Yeah, up 14% today. So this was very good news. Affirm, even after they showed off their stock, was up, 10+%. But mainly, guys, and it's the reason why we only have 20 people in here. You guys are ridiculous for not showing up. The people who are here get to understand that Adyen, although these are companies that are not necessarily American companies, still means that if you buy at the right time, you can make a pretty outsized return. Today, up 35% on the day. Okay. And this is no small company. This is, tens of billions of dollars of market cap, 23 billion at this time. I still think it has a long run to go. Honestly, if they actually do get back to their margins of 65%, which they believe, 50 plus in the short term to 2026, which would be massive margin improvement, I think we're going to see a massive improvement in the stock price. Yeah, you guys have to apologize for me for being late. People are now showing up 5 minutes late because they're just used to it now, right? Sponsored by Neo Financial here in Canada. Now they sent me a nice hat because you beautiful people sign up for the for their product. So there was a month, I forget what month it was, a little bit ago, where I was the number one referrer to Neo Financial in their entire company, which I thought was pretty interesting. Anyway, and that's thanks to you guys. So great bank here in Canada. Okay, off that, let's talk about what we saw today. So Adyen, the reason for the large pop actually had to do with their investor day. They never, ever cover quarterly results or investor days. They're very quiet, not so transparent whenever it comes to shareholders. Okay. And a lot of people that only cover American stocks, you might be thinking, what do you mean they don't do quarterly results? How's that even possible? Well, where they're located out of, which is the Netherlands, they only have to show off their earnings every 6 months. That's by legal requirement. Nubank actually follows under that same suit as well. They only need to show every 6 months. They do quarterly because they want on that normal standard. Regardless, Adyen said they are going to bring it up to quarterly, at least over 2024. So they'll be showing us quarterly results going forward and showing how they are planning to offer value-added services in the payments game and increase margins over time. It was a very interesting investor day. I don't think I've seen an investor day quite like Adyen's. They did show off some great things, but honestly, the main key points were already shown off before the call had even started. So here, let me bring up some of my things that we saw. So like I said, margins, this was the main one. Let me bring up my spreadsheet as well. I seem very, very unprepared. This is why I show up late, ladies and gentlemen. I show up late so I can bring up my freaking Google Drive. That's it. Okay. I'll show you guys exactly what we saw on Adyen side and why they popped 35%. By the way, this was a stock that I covered on the Stock Tank, which is Tevis and I's show where we talk about stocks that are engaging to us, where we think, there might be some alpha to be made. And Adyen was one of the stocks that I had covered. Now it's looking like this is the top performer so far out of all the companies that we've shown, just because I covered it at such a low price. It was in the $6 ranges. So for it to have popped and almost hit $10 today, pretty good return in the short period of time. So let me just quickly show off Adyen. There's a lot of information here, a lot of stuff that they didn't cover. So we don't get to see a lot of their operating margins. We can pretty much just wipe all this away, hide it all. But usually they do cover all of this in halves, right? So we can see every single half. What they were able to show was Q3 and Q2. That's all they showed off, which then we can derive what Q1 was, because we already know the first half. And this is essentially what we saw is an improvement back to revenue starting to climb back up. Point of sale volume as a percentage of process volume is increasing all the way to 17%, which is very good for them. Digital continues to be insanely strong, and platforms are growing very strongly as well. Unified commerce. Some people even say they might have the best offering in the entire market. Quite interesting. But mainly, it was on their margins. This was the exciting part, is that margins are going to get better. They're going to be able to charge more, and that customers will actually be happy to take it. There is no better payment processor than Adyen. And just some of the things that they talk about, you never hear for public companies ever. Like, they have next to no, like zero stock-based compensation, okay? They have this really weird way of hiring where you have to have long tenure at the company before you start earning, what you would usually be making at a Stripe or Braintree on year one. But then by year 10 plus, you're usually making more than those companies. So they really benefit tenured employees. And the way that they talk about the way they work as a team in this business is very interesting. They do everything in-house. This is quote, "Our licenses, our software, our code, our customers, everything is all done on one platform. We have zero third-party dependency. We do not do M&As, and we do not," and well, they did not quote this, but this is in my notes. "They do not distribute to shareholders." That was one of the things that I thought was quite funny. They were talking about how, they are a leader in terms of their what is it? Liquidity, I guess, their capital position versus any other payments company, in the world. They're some of the best. They're rated well on the S&P 500. I think it's an A- right now. So they're very, very good. But because they have a lot of bank licenses, because of this, they want to continue to have a lot of cash on hand and no debt, essentially. Their NPS scores continue to improve every single quarter. There was at one point where they got all the way down to 35 points during COVID. Now it's climbing all the way back up to 65, seeing constant improvements as they focus more on, just trying to focus on what the customer wants. They said payments is not a solved problem. There's still a lot of work to be done here, and people don't quite understand that. 15% of online transactions still continue to have false positives in terms of fraud. So that's important to understand that Adyen is still trying to solve this problem. And and they want to keep their costs down, much, much lower than any of their competitors. They're planning on only hiring a couple hundred people in all of 2024, mainly focused on engineering and sales. They said they never hire anyone for scheduling, for data entry. They never hire for roles that could be automated, okay? They do software for everything if they can, built all in-house. It's one of the coolest companies that I think I've ever followed, especially whenever you see things like stock-based compensation. But let's quickly get off Adyen for a second. I wanted to talk about Shift4 because this is really the company that's taking my eye. They're up about 14% today, and I still don't think it's enough. Like, I think that this company really, really deserves love. And their stock-based compensation is insanely low. They're 1.8% of revenue right now. Here, let me just bring up my spreadsheet. Look at this. So whenever looking at their payments-based revenue, just from a little bit ago, this was really in the peaks of COVID here. They got down as low as $121 million in payment-based revenue and $20 million for subscription and other revenue. Looking at it all the way to today, you're seeing $48 million in subscription revenue and $627 million in payments-based revenue. The most exciting part about this for me is they literally said, this is excluding all of our large growth that we're expecting in Q4. They acquired 2 separate businesses that should be coming online in Q4. None of those initiatives are coming on at this time. They are going fully international. They're getting into Canada and Europe all at the exact same time. They said that their strategy for M&A is much different than any other company, where payments companies, and they kind of are taking a shot directly at PayPal. They're saying, payments companies for the long time have not had great track records for M&A. We believe we're completely different. They said, we're one of the best capital allocators in the industry. Despite understandable skepticism regarding M&A, our track record is really unmatched over the last decade. They believe that they're buying companies that they think that they can, fix around and also cross-sell to these companies and boost both of their revenues. They're already starting with Finaro, which this is a company that they just acquired. It just finalized like a month ago, maybe, right? This company, they're already saying 33% of their revenue is already coming from clients that they offer at Shift4. So it's I can't get over how insane this company is. Everything I look at is mind-blowing. SkyTab installments this quarter is accelerating growth rates. This is more of their restaurant terminals where they're going directly after Toast. Toast is seeing some problems in their growth rates, and that's sort of not what we're seeing at Shift4 at all. They offer just a much, much cheaper offering than Toast, and yet because of their low stock-based compensation, low overhead, they bring it all down to the bottom line. So their free cash flow is doing very well. They are net income positive. This is a fully growing company, and they said the market just is not giving us any love for the great work that we're doing. They said we're getting ready to take ourselves private if people don't start buying this stock. And I 100% agree. I think that's exactly what's happening in fintech and payments in general. It's just people need to listen more, I think, to the insiders of these payments companies, because they know that there's so many value-added services, and that how many data moats that these companies have, that not only do they know where the customer has been, but now plugging this all into AI and getting to sort of see where the customer will be going forward is so amazing for conversion rates, and improving those performances over time is like the bread and butter of, the growth of an e-commerce company online, right? So these payment companies have a lot of power, and they're just being priced out of the markets right now. They just, rates are going high, companies have to cut expenses, and so they're not worried about performance. But whenever this turns around, they will be. And so companies like Shift4 will do even better than they're doing today. I think companies like Affirm and Adyen and PayPal will all benefit from this. I'm very, very excited to see Shift4's quarter. It wasn't the best all-around quarter that they could ever have shown. But seeing what's going to come for Q4, seeing how depressed this stock actually is, this is one of the most impressive stocks on the market, as far as what I can see. Their growth internationally, we always have to remember, and this is something that Roy and I talk about a lot, is that North America has maybe some of the highest, competition in payments. And so they have the lowest comps, the lowest take rate versus the rest of the world. Europe is actually much higher. It's why Adyen has made so much money. But Adyen has to go into North America to gain a large percentage of market share, right? Because that's still where the bulk of payments happen. But so for them to gain access into North America is going to lower margins, at least, for the foreseeable future. That's what people are worried about. That's the bear case, that they have to go down margin or down market in order to gain new growth. That's not what Shift4 is seeing. They're a North American company now breaking into Europe with so many international clients that have venues, because they deal with hotels and stadiums and all of these things that have venues and hotels and restaurants all internationally. And so no wonder they want to come to Canada immediately. They want to go over to Europe, and Finaro and Appetize and all of these companies are allowing them to do that. It's very, very interesting. They acquired a company called Appetize for about $100 million. They said this was one of the best acquisitions that's getting absolutely no love. They said we probably added 600 new venues just off this acquisition, okay? Let alone all the value-added services that it adds by acquiring this new company. Just the client base is going to pay for this acquisition alone, okay? Just bringing SkyTab POS and just their mobile payment software to these venues will be good enough to pay for this acquisition. It's very, very interesting. It's very interesting. And this company is at least the stock price is quite depressed. So no wonder it's running today. At one point in the pre-market, it was actually going down just because growth rates had decelerated quarter over quarter. They're saying Q4, it will re-accelerate. And another thing too, and then I'll get to comments, because obviously my brain is going at 1,000 miles a minute right now. One of the things that that's so interesting that Adyen spoke about, that Shift4 spoke about, that all these companies are talking about, is that payments is a very long, turnaround between whenever you get a client to whenever you receive revenue. Galileo has that same problem, right? They're saying the sales cycle is only getting longer. So whenever a company like Shift4 is bringing out these SkyTab POSs to the most amount of restaurants that they've seen, I think they just said they delivered 23,000 new locations, or they're at 23,000. Let me see. They're at a total of 23,000 systems now. Toast is at 99,000. So for them to have 23,000 systems already after launching a year ago is unbelievable. That revenue and the acceleration of how fast they're going to grow from that is going to be future projected, okay? If they can continue to take Toast clients, okay, continue to find new restaurants that potentially are on legacy systems and bring them over to SkyTab, this is amazing opportunities. It's hard not for me to love all of these fintech companies, honestly. I just think the thing for me is that a lot of these companies should be at extremely high valuations, and then it would sort of make sense that you're kind of looking at high growth companies with high valuations, and then you're kind of just placing yourself in sort of SaaS or cybersecurity or something like these markets that have just both, very high growth rates, which is possible for an industry, but then also high valuations. That's not what we're seeing in fintech. People are so discouraged by this market right now, and for good reason. But I believe that it's just going to lead to acceleration in growth rates going forward. Unboxing 101. As interest rates decrease in 2024-25, could you kindly share your insights on how this may benefit SoFi Technologies? Thanks, Unbox. Appreciate the $5. So I've talked about this in quite some length. I mean, there's a couple things that people need to understand. One, that SoFi has this massive book of loans for sale. Okay, if interest rates are going to continue to climb, that no buyer wants to buy those loans at old interest rates, because if they're fixed interest rates, for example, someone might have gotten a personal loan a while back and is paying a 10% APR. Okay, but to the bank, that's called a coupon rate. So maybe they're getting a 10% coupon rate. All right, that's great. But now we're kind of signing up people at 15% coupon rate. So who wants 10% if you can get 15%, right? And the spread difference between how much it costs to fund that capital, what's the chance of default, and then how high is that coupon rate, is that beautiful number, okay? There's a beautiful number there. And so you have to assess that. As rates start to come down and coupon rates start to come down and defaults and everything like this start to come down, what you really do start to see is that these higher coupon rate bonds, or well, not bonds, but loans for sale, potentially bonds, become much more attractive because they'll have higher rates, right? And so SoFi's entire held for sale book of loans becomes much more or priced much higher than what people are currently seeing it at. So as rates come down, SoFi's entire fair value of their loans skyrockets. That is very exciting. So that means we have a lot more money for future growth. It means that we can sell off a lot of our loans to potentially become less asset heavy and become relieve ourselves from that capital restriction, and then go out and acquire new customers. It leads to a whole new cycle. So thank you for your thing. But aside from just saying that student loans and home loans and all these products will benefit, the main benefactor is the fact that our loan book will become much more appetizing for banks to purchase our debt. $5 USD is $1 million Canadian. It's true. Let's see what else people are saying. Shift 4 had something nice to say about Adyen too. Oh, well, I'll have to read I just read the shareholder letter and things like this. So I think I was listening to their call this morning, but I don't remember anything about Adyen. Asking, since you're so bullish on all of them, interested in how you differentiate or prioritize them. Margins, growth rates, and then matching that with multiples. So, I mean, it's a hard game to play, I guess. But if a company continues to find new S curves and is it's hard. I don't actually think that I bring it down to a direct science of if A plus B equals C or something like this. No, I think there's a weird balance that you have to put, considering a lot of these metrics are company specific KPIs, and weighing those is kind of my own personal style. So it's hard. There's no real science to some of this stuff. But yeah. Shift 4 said that every payments company needed M&A to get over the hump, except one, and that was Adyen. Well, it's true. Adyen's definitely in a class of its own. SoFi 10Q is out. When will you go over it? I've already plugged it all into my spreadsheet. I'm thinking maybe we do an entire day tomorrow to talk about that, just because I don't know how much time we're going to have, but we've already used up 22 minutes. I saw this interesting thing, by the way. I wanted to show you guys this. There's been this chart going around showing how consumer debt is just at sky-high levels. And potentially maybe I can show that off. Bear with me here. This was Adyen's beautiful quarter, by the way, on Koifin. Okay, where am I going here? Do I have a dashboard for it? Or no. There's so many things on this. Oh, you know what? Oh, okay, you know what? I'll just find it on my own. I'm gonna look ridiculous trying to search for this and not remember how to get there. And I just found it. Okay, funny. Okay, we're gonna take a look at consumer debt over time. It's this chart that everyone likes to look at and shows how scary the world's getting and how people are going to be defaulting. Okay, can I throw this up on the chart real quick? Come on. Okay, there we go. Okay, scary chart. Consumer loans, credit card debts, and other revolving plans are just skyrocketing at all commercial banks at all-time highs consistently. Obviously, it doesn't take a scientist to tell you that this could be a problem, okay? It also means a massive market for a company like SoFi that wants to refinance all that debt. Then I came across this eToro slide that they were showing off, comparing this credit card debt as a percentage of total deposits across US banks. I thought this was quite interesting as well, because it kind of shows you how much less of a problem this might be. Kind of the opposite chart, right? So whenever you look at it as a percentage of how much money there is even out there, it changes. It's quite interesting. So people maybe need to, refrain from fear mongering on that side as well. I was a little bit Affirm during their call, because they were quite excited. They said a couple things that was interesting. One of them was that they believe that the consumer is much stronger than people are putting out. They expect consumers to continue to outspend. They are saying that student loans they're not seeing any impact from this at all. This is the third company, by the way, that I've seen that has said, we really haven't seen any impact from student loans coming back. So maybe it's just a little too early to tell, or, maybe the consumer is stronger than people think. In that case, it's like, do rates need to hold up for longer? Because if consumers are still outspending and they're still strong and student loans are not, breaking people, then maybe inflation just continues. Obviously, it's not as basic as that. There was a couple things. They said they saw modest cracks in employment numbers. But yeah, essentially, they had a decent quarter. I just can't get over the actual management there. They take such a large amount of stock-based compensation, especially whenever you look at it as a percentage of net revenue. They're growing their network, but it seems like one of those companies that is working for their internal team rather than their shareholders, versus companies that I take a look at like Nubank, like Shift4, like Adyen, that seem to be working for the shareholder and not the initial employees. I get different feelings about them just based on Robinhood as well. I think fell as high as 14.5%, or that's what they ended the day at. I want to pull the trigger on this stock just because it's insanely low, but I just can't get over the way that they treat shareholders over time, and just knowing their, the CEO awards that Vlad Tenev wanted to pay himself like $900 million. Yeah, he cut that $500 million or whatever, but still, it's the fact that you even had the gall to even do that for creating a brokerage. It's ridiculous, in my opinion. And people complain about SoFi's $100 million package for Noto, for wanting to hit future performance-based stock units all the way up to $45 a share. It's like, it's not even in the same ballpark. Anyway, they said that the Affirm card is going to be a massive part of their future growth, that they think that they want to get to a point where every single client that they actually take on, they'll just immediately send them out in Affirm card. Obviously, it's not as easy as that, because the newest consumer is the highest or most likely to actually default on Affirm, because they know nothing about these clients. But they want to get to that point. They said that they believe that the Affirm card is going to supercharge everything. They said they're going to talk more about it next week at their new investor day, and talk about some of these spicy things that they have cooked up for investor day next week. But it is quite interesting. One of the things that I did think was quite interesting, they said two main things that really stuck out to me during the quarter. Someone asked them about how regulators might want to start stepping more in towards these payment companies and fintechs. And they said, how are you dealing with regulators in that case? And Max Levchin sort of said, buy now, pay later was designed to be nicer than credit cards. He said, we're simple, transparent, and clear with regulators. We're clear with the consumers about the fees that they pay. That was the whole point of buy now, pay later in the first place. So we have nothing to worry about. I thought that was so important. And that I also thought this was another thing that they brought up, that the whole idea about defaulting whenever rates start to climb on variable rates is in some part due to a bad taste in the consumer's mouth and a lack of understanding with the product that they even signed up with. Okay. And that as rates start to come up and these banks are actually showing that they have to either pay more, or that less of the principal is actually being paid down, that they feel jaded and that they feel lied to. And so they go, you know what? this, I'm not paying this back. Okay, I'm walking away from the deal. Where Max Levchin sort of said, with fixed transparent lending, it just leads to lower defaults because it's exactly what the customer had signed up for. So there's no reason to not expect what's coming later. It's fixed lending. Exactly. There's no hidden fees. There's no anything like that. So less spite to the lender leads to less defaults over time, or the borrower, less spite to the borrower. I thought that was interesting. Obviously, if you read what a credit card or any sort of personal loan is, that you wouldn't be spited if interest rates started to go up or if any sort of, variable rate lending. But the truth is that there's a lot of people that take on debt that don't even understand quite what they're signing up for, right? And that's just, there has to be some understanding that there is ignorance in the market. Buy now, pay later is very transparent in that case. One of the things that is stopping me from getting into Affirm that I just can't get over is how they even make money. They are saying right now how they're pushing fixed APRs to merchants between 5 to 10%. And right now it's being well received. Okay, so offering a potentially low APRs to their clients, meaning, hey, sign up for buy now, pay later, and you only have to pay X% or whatever. I use Affirm. I actually am a user of their products, but I'm only taking a loan if they're offering me 0%. And even then I still think about, do I want a credit card with cash back and then immediately pay it off in the next 2 weeks or whatever? Or do I want to use Affirm, get 0% APR, and then, make my 4.5% in my checking and savings account? Which one is actually going to earn me more money over time? Who knows? Especially whenever I'm dealing with like an Amex and they only pay me the cash back a year from now. It's like, well, I would want Affirm then because I want the money in my pocket to make 4.5%. So it's like higher cash back in my head. So that's just what I do. And I probably don't even need to be messing around with a couple $1,000s, but it's like, I don't know. The little cheap arbitrages that I try to find in APYs and stuff, but regardless. So the thing that I just don't understand is the fact that merchants are even willing to pay 5 to 10%, or if regulators have a problem with this, by the way, because if the whole big idea is that PayPal is charging too much to the merchant at 3.5%, who is regulating this dude to charge 10% to the merchant to offer buy now, pay later? PayPal will do it for free, right? They just want the payment processing to go to their option. And so I don't understand how Affirm survives whenever PayPal can bundle this service. Now, what they would say to me back, and I kind of already know the answer, is that they don't have as flexible payments as Affirm. Affirm will stretch out a payment 6 or even 12 months in advance, and that's true. At 0%, APRs, PayPal will do pay in 4. That is different to the consumer, but I don't think it's that big of a difference. They want to make it out to be this super big deal, but I just think it's lowering the initial sticker cost. I think that's the big problem. Anyway, I'm rambling on, but I just thought, I wonder what people think about that. Is how can Affirm even survive? One of the things that they did say, which was quite cool, they said Shop Pay led to accelerated growth in gross merchandise volume, saying much faster than any of the analysts have forecasted. That they would have just thought it would have grown in line with e-commerce, but actually Shop Pay is growing much, much faster than people thought. See, Shopify has an equity position in Affirm, and so they'll push their products. They do the exact same thing with Amazon as well. In fact, it was kind of funny. We spoke about this earlier, how they're now bringing buy now, pay later to small businesses now. They said, we want to start getting into small business, buy now, pay later. And so we started with the world's biggest e-commerce place as a starting ground to start growing this platform. I thought that was pretty cheeky of them, but yeah, it's true. So yeah, a couple cool things. I love the idea of Affirm. I love their product. I love management. I don't love how they pay themselves. I don't love just how much they spend on sales and marketing and all of these, like, just their expenses are so out of whack, in my opinion. And yeah, whenever you can get a company like Shift4 or Adyen for similar rates, it's unbelievable. Now, one of the things I did also want to bring up was a tweet that I had tweeted. If you guys aren't following me on Twitter, that's absolutely freaking ridiculous because I post nothing but amazing content like this. It got 7 likes. If I just included the hashtag or whatever you guys want to call it of SoFi, I would have gotten 250 likes. But no, because I just said in a regular investing thing, 7 likes, but it did get 261 votes, which is all I care about. What is more important to you in equity investing? An excellent company at fair valuation, or fair company at an excellent valuation? Now, I don't necessarily think that there's one direct right answer in this, because I think Throwable was sort of in my head. He said investing is definitely for excellent company, fair value. Trading is more for the okay company at a great value. I find I do both. Like, you can kind of look at it as saying, okay, great company, okay value. Adyen, Shopify, Nvidia, all of these companies that Tesla, Airbnb, great company, okay value. Okay company, amazing value. I'm looking at PayPal. Yeah, I've got maybe one other one on my mind, but I'm not going to say it. But yeah, so maybe even on my portfolio, it has a similar split, like 90-10 in terms of the way that I look at this. But that is how I invest. Okay. And I wanted to put this poll out to see how people sort of thought about this as well, because it completely changes the way people will look at something like my portfolio. Whenever I say that Shopify is my number one pick, and then people come at me and they show me multiples versus other e-commerce providers, I just laugh. I cannot help but say, okay, we're just valuing this company 2 different ways. You're trying to think that this is just a regular company. You're comparing it to other e-commerce providers and then saying that it has no great value, and so that shouldn't be investable. I'm saying this is a 100-year-long company, a top 5 company in the world in the future, and it's priced okay. And in fact, I'm so green on the position because I've had it for a very, very long time. But I think it's important whenever people are long-term investing that they need to decide the way that they're going to invest and then stay in that bracket. Maybe you can find from time to time, like SoFi at $4 a share, that maybe that's a great company at a great value, but those times come around few and far between. Mark, Tanner, can I get your quick thoughts on Marqeta? Been wanting to hear about it from you. Yeah, let me bring up some of my notes, because honestly, I've been doing so many of these calls that I don't even remember what that their margins improved quite a lot. Let me see here. By the way, tomorrow is the 100th episode of the Fintech Frenzy. 100 episodes. I don't remember where the thing is. Maybe I'll just talk candidly about Marqeta really quickly. I think that there's a lot of opportunity there. I think embedded finance is unbelievably huge. Adyen was talking about it all day today, how this is where the future is going, and they deal with some of the largest clients in the world, like Cash App, like Affirm, like all of these companies. I don't actually own the stock, but they'll be around. They'll be around. They've got a crap ton of cash and no debt, and they're just growing healthily. It's a great thing about fintechs. You can build a lot of stuff just in-house. Really wish I did more research on SoFi stock's price action. Great company, but stock price action has been a bit frustrating. The SoFi calls I bought earlier this year have gotten destroyed. Well, if you're getting into SoFi call options, yeah, I would have done more research into SoFi stock price action. But once again, it's mainly just about excellent company, okay value, or something along these lines. Like, I'm not worried about the short term. This is a very long-term hold for me. We have to remember that fintech is going to be held to this macro standard for a long time, especially if you're a lender. Okay. So it's important that patience is definitely part of the fintech game for sure. But if the companies can actually hold out for long enough, that I think that there will be a ton of positive price action to be seen. Are you bullish after reading 10Q? Yeah, in certain areas. In certain areas, I'm not. But am I overall bullish on SoFi? Yeah, my opinions on SoFi have not changed, but it's not all sunshine and rainbows. Like the company is in a bad position in terms of this macro environment. They're a lender. You know what I mean? Like, I think out of all the companies that we cover, Robinhood, here, let me go through a list of just companies that we were just taking a look at. Robinhood, Toast, well, Upstart is probably the highest chance of actually going bankrupt. I think that company could go bankrupt. But Square and practically every fintech that we've spoken about on this channel, the one thing I would say is that SoFi has the ability to go bankrupt. I don't actually think that they will. I think that worst comes to worst, growth goes down to zero near, and that we have to rely on financial services to grow, which just won't be fast enough. That'll slow growth rates pretty severely. Okay. But whenever you're dealing in a ton of unpersonal or unsecured personal loans, that there's a possibility that unemployment goes up, that interest rates stay high, and that defaults climb. Whenever you're more of just these fee for service type businesses, that there's no real risk of default or risk of going bankrupt. Adyen does not go bankrupt. That company will never, well, I can't say will never, but not in the way that the company's built right now. It's not going bankrupt. Okay. That can't be said for banks. And that's also why they get a change in their valuation. That's why they kind of get a little bit hampered down. But I'm betting on the idea that they're not going to do that. And so if, for example, they do survive this, then there's a lot of alpha that people are sort of not pricing into the stock because of that risk of default. Charge-offs went up a decent bit for PayPal. They loosened lending standards under Schulman in 2022. Not great. Yeah, but they reversed all that, right? I think they're actually tighter than what they were before they loosened them. And wasn't that only for their corporate side, which was like 1/3 or something of their lending? Yeah, anyway. Roy can correct me on that. And Roy, it's Wednesday, by the way. If you want to have a chat soon, I'd love to get your updates on all these fintech companies. I know you just listened to the Investor Day or parts of it for Adyen. I'd be interested in what you thought of it. Obviously, there's no transcript release on any of these. And in fact, the Investor Day, presentation hasn't actually been released yet. I took a couple screenshots while I was listening to it, but for a 3.5 hour call or whatever it was, to absorb everything that you're hearing it's not going to happen. So next week, let's do it. Sounds good. Tell these dorks to start referring their friends to SoFi. Yeah, do that. Yeah, I don't know if there's anything else. There was a SoFi insider sale of 136,000 shares by Lauren Stafford Webb, Chief Marketing Officer. One of the things that was brought up to me, however, and I will bring it up here. Do I have the screenshot? Okay, well, maybe I'll bring it up for tomorrow's earnings call. I thought I had it, but regardless, was that insider sales don't always mean that we're finding the top. There was this massive amount, I think it was Jeremy Rishel, that was selling in the $4 or $5 ranges, sold a bunch of his shares in that price target, and then the stock proceeded to double like right after he sold. So it's important to keep in mind that, remember, Lauren Stafford Webb is a chief marketing officer. She's not going to time the stock very well, at least if she believes that it's coming down. There's a whole bunch of reasons to sell. There's only one reason to buy. Are you looking at banks in India, specifically HDB? No, I'm not. I maybe would be interested in it just because of how fast that population is growing, that maybe potentially they could be the next, LATAM, in my opinion. But no, I haven't done any research yet. Thoughts on Affirm? Struggle to figure out how Affirm can thrive and grow going forward. The competition for them is brutal. No, I completely agree. PayPal just seems to have, a better mousetrap just because of bundling with, their overall PayPal checkout. So I don't get how they price better than them. I don't get why a merchant would want Affirm over something like PayPal Buy Now Pay Later or something along these lines. Maybe Affirm card changes that, lowers the transaction or the average transaction volume and makes just using that much more efficient. But then I don't see that PayPal doesn't come out with a similar product very close after, with a much, much larger user base as well. India is politically well positioned. HDB growing similar to new. Check it out. Okay, I will. You're getting me interested. However, I've never seen a single company grow anywhere near Nubank. They have the lowest customer acquisition costs in the world. Amazon does buy now, pay later too with no interest. Amazon does, or Amazon does through Affirm? Because that was the partnership that I understood for Amazon, is that they will do buy now, pay later, but it's actually Affirm that does it. But it's not about no APR. I find like that doesn't make money for Affirm, and it doesn't even really make money for PayPal either. you know what I mean? But the fact is that a market doesn't have to exist. There doesn't have to be big players for buy now, pay later. It could be a value-added service amongst a larger payment company, one where Affirm maybe just can't get into as easily. Thoughts. The demand for loans typically rises with falling interest rates. However, during a concurrent recession, this phenomenon may impede overall growth. Yeah, I mean, potentially. I'm just betting on the former happening, I guess. What does New do so well with their CAC that SoFi could learn from, or is LATAM market that different? I'm not sure. It's hard to know why people refer people by word of mouth other than just saying that the product's amazing. SoFi, I'm not sure. They're happy to give referral bonuses of massive amounts. Hundreds and hundreds of dollars if you sign up for a direct deposit. Hundreds of dollars if you sign up for a different product. $10 to just check your credit score. $10 if you want to just see if you're approved for a mortgage. Like just tons and tons of marketing costs. Okay. I don't know if you guys remember that picture that I shared the other day where it was just showing off, how much mail that person received from SoFi. It's working for them. They're a growing company. But it's not anything like Nubank at all. Nubank doesn't offer you anything for referring your friends. Do it because you love them. That's their strategy. And that's been Cash App's strategy as well. And both have worked, both one in the United States and one here. A matter for why they do that. It's just, I'm sorry, but it's that factor of being cool. And I think SoFi is cool to a degree, but nothing like Cash App, nothing like Nubank. but obviously much more than Lending Club. If you had to pick only 3 fintech stocks, short term up to 1 year, and 3 for long term, 5 years plus, which would you? I mean, whenever it comes to like, hey, you have to pick 6 stocks right now, I'm like, I would probably forget about some of the ones that I absolutely love. Long term, I'd have to say Nubank is one. SoFi would also probably fall under long term. And do I get to choose Mercado Libre? I don't know what other one I would choose. Like, I'm gonna assume that Mercado Libre, Shopify, these sorts of ones won't be allowed in there. For 1 year, like really short-term bets, I'd probably say like PayPal, Upstart, and Adyen, just as recovery plays. That I think that there's probably large gains there, but that's just a brief. Like, I have not given this overall. I've not vetted this. I'm just thinking about it right now. I sold $30,000 worth of Nubank at $4.20. It's haunted me ever since. Yeah, I get that, Moonshot. That would haunt me. I think there's a fun little thing I'm going to do with Nubank, and that's called never sell it. Yeah, it's already joined my extremely long conviction mindset. Like, I'm just so set on that company being amazing, and I'm ready to party on the 14th. I don't usually get very bullish for stocks like whenever they report, but like I was quite bullish this season, or like going into this earnings season about Shopify. I had a feeling they were going to outperform on a free cash flow basis. I think they'll do that again in Q4, by the way. I think that Nubank, I'm very, very excited for. There's probably other ones as well. But SoFi is an outstanding company. However, the potential impact of its stability and performance in the event of Anthony Noto's departure raises concerns about the pace and resilience of the organization. I don't necessarily think so. I mean, sure, but you could say the same about Elon Musk, about Tim Cook, about a lot of companies. You know, what would Palantir be without Alex Karp? What would Affirm be without Max Levchin? What would Shopify be without Toby Luckey? These stocks would just crumble without their founders. And I mean, Tim Cook's not a founder, neither is Anthony Noto, but quasi-founders, let's say, or something along these lines, where people really value their expertise. Key person insurance or whatever. Covering StoneCo earnings on November 10th. I will now. I'll add that to the list. Friday, okay. Yeah, I'll do that. Anything else that you guys want from me? Oh, I did want to add as well. This is super important. And I think, I don't know what your name is, Sigig. I think it was you that had asked about my all-in-one SoFi video. I'm still absolutely working on it. It's just very, very big. And in fact, I've poured quite a lot of money into it as well. I'm like buying research and stuff to see information on total addressable markets and stuff for the industry. So we'll see. I'm kind of debating on how I'm going to release it, in fact, but it's going to be way too long as just a standalone video. But yeah, putting it together now that I've got the 10Q for now that I have the 10Q for SoFi, it's definitely going to accelerate how fast I'm working on it. This isn't Celsius, because Celsius isn't in Canada yet. But their earnings were quite spectacular as well. That might go down as maybe one of the most hated stock tank. People were just bashing the company, and then they just put out another quarter that was just unbelievable. Unbelievable. So everyone can talk crap on these. Another one, Celsius. Guys, unbelievable company. Okay value. Okay? There's not an exceptional valuation on the stock, but people, it's like you have to pick your investment strategy and stick with it. If you're able to buy Nubank, you're able to buy Celsius. I'm telling you. That company is extremely, extremely strong. Once again, their stock-based compensation. Like I think I might lean on stock-based compensation as more of an indicator of the strength of management than maybe I would have previously. I used to brush that off, but now the companies that I see it with like really, really low stock-based compensation, I just get this good feeling like you're working for me. I'm not giving you capital so then you can go fund your dreams. Find that with like Rocket Lab. I'm like, what are you investing for? Like for this person's future? Because you're not getting anything in return. What would future investing be without Tanner? That's funny. Already waiting for the next SoFi earnings. Can I get a date so I could start a countdown at work? Yeah, I could probably give you a date. January 30th would probably be the earnings results. Is Robinhood in Canada? No. I actually believe if management can execute and penetrate the UK, Europe, Australia, New Zealand, they could be huge, but it's going to take some time. Yeah, they're not in Canada either. And competition's getting stronger here. We're starting to get access to cheaper options. Fully like whenever Robinhood was first taking off, there was no commission-free trading in Canada. In fact, TD Ameritrade offers free commission trading. Here in Canada, they still charge $10 per trade. $10 per buy, $10 per sell. So, not great. I still use them if I need to buy like Nubank or whatever. And in fact, I think they improved it a little bit. I think they offer a certain amount of trades now per year if you're a frequent trader that are free. I forget, but yeah. But no, we have Wealth Simple now and these sorts of things that are fully commission free that have come in and actually offered a good service. So it'll be harder for Robinhood to crack this market than it would be if they had come much earlier. Because I wouldn't switch immediately. I might open an account so then maybe I can get access to some of their services, but I get 4.5% in my checkings. I get like some of our rates are pretty high. Yeah, I still don't think that like even Wealth Simple lives up to the level of Robinhood, but they probably won't even be here for another 12 months, even if that. I'm sick and tired of SoFi falling off a cliff after a single day pump up in every single quarter. Calvin, my man, the macro hasn't changed. We've said higher for longer is always going to be this big weight, you know? I think it's the short-term mindset, not of you, Calvin, but just of the retail investor, where a lot of people say, yeah, no, this is a 5-year trade for me. And then they'll hold it. Like, I think the average hold time now for retail, something like 5.5 months now or something like this. It's like, there's no, like, what are you talking about? Like, what happened to the long-term hold? What? So they put out a one singular quarter where things don't go 100% according to plan. Now it's a sell, like everything's going to turn bad, like as if Apple hasn't had terrible quarters before. As if Tesla hasn't put out bad results before. Would it have been worth it to sell Tesla every single time that it comes down? I mean, maybe like on an actual dollar base, but the idea that you're going to get in at a cheaper rate and continuously sell at highs and buy at lows is something that I've given up on years and years ago. It's funny because I'm actually pretty young in my investment, like how long I'll be investing, but I've still been on this for like 8 years now. It's like a sizable portion of my life. Is asking what your average is in SoFi too intrusive? Yeah, I'm not going to say, but I mean, you can ask. I think I'm slightly green right now. I'll have to see. I don't even know what the stock price is today. 730. Okay, I will say I am not green right now. I'm like, I'm like near break even. Might drop lower next week if CPI data comes in hot. Would be a good buying opportunity. Sorry, I'm just laughing at the idea of what I just did. I go, no, I'm not gonna answer. And then I'm like, what does it matter? Calvin, relax, my man. You got the same average as I do. Why are you freaking out? If it's opportunity cost, I get it, but yeah. I think it's I don't want a 20% return on some sort of play that I could be buying on a macro level and increase my risk or something like this, because you're going to get some wrong whenever you do that. This is just me. But for a lot of these companies, I just know that whenever that macro does change and we see sort of that Tesla moment where the, S curves increase, margins increase, stock 20x's, that's what I'm looking for, because I think that all these stocks are undervalued, and I think that there will be a time when they're overvalued. That's exciting too. Like SoFi was extremely high valued before, back in like July of 2021 or whatever. It was like $25 a share, way overpriced. It probably should never have been near that price, but that doesn't mean that that delusional enthusiasm or euphoric, euphoric times won't come in the future as well. And those are the times to sort of look to sell. I'm not selling now. Who gives a crap? We're buying this amazing company that's growing at insane rates, and obviously is growing a cult following and offering newer products every day and increasing average revenue per users and lowering CAC costs and diversifying, and will be diversifying internationally. They're doing amazing. They're doing amazing, especially given the market that they're in. I want to see how they perform whenever the market turns. Fintech has a lot of growth ahead. I'm confident in that. Picking the right ones is probably the difficulty now. But that's why I like doing the show, because it forces me to do a heck load of due diligence. And it's what I should be doing right now, considering I took a 30-minute show and doubled it. But I like whenever it's just like there's like 90 people here. It's just like it's sort of more chill. Bitcoin is ripping, like right now, or just like over the last little bit, because it's been doing well over the last little bit. Just over the last little bit. Okay. Yeah, I was looking at Solana as well. That's just doing very well. Yeah, like look over the last month. It's like I don't even remember when that happened. It just went from 22 to 43. I didn't even see it coming. Okay. Anyway. Yeah, I own crypto. I own Bitcoin. I own a little bit of Ethereum, and I own Solana. Any guess when SoFi will come out with level 1 options? I've asked. I haven't heard. Haven't heard anything yet. However, someone found out that I think it was Ken Magin or something, found out that the way that they spoke about level 1 options has changed, and that there is a potential that maybe they are beta testing it. So could be close. All right, ladies and gentlemen, I think I'm going to get going. I really do appreciate this. This was more of a chill vibe than usual, which is nice and fun. When does PayPal price turn around in your view? Over the next 12 months? Like, I don't know. I gave it an 18-month time horizon about 6 months ago. So 12 months? I don't know. How am I to know? It's the frickin' give us a specific date or else. I feel like sometimes, and this is something that creators get caught up in doing, and I really hope I never fall into this, of the idea that people want, what the price will be, and they want this certain answer that, to be honest, the people that are giving you those answers don't know what you like. I mean, I can't say that. Some people are very strong on the idea that they can follow price action. Maybe that's true, but I can't, and I hope that I never change on the idea that, like, I'm never going to tell you when to buy or when to sell or that sort of stuff. I'm only ever going to say that, I'm going to be buying or selling based on fundamentals. And I'm going to look at macro as being how that's going to affect fundamentals. There is some of it that goes into price action, but honestly, it's not my strong suit. And maybe that's why we lean on other people. But my thing is, I'm going to try to follow company-specific news and understand those businesses better than anyone. That's my goal. Probably not even true either, but love you guys. Appreciate the time. Tell us how many shares we need to retire and we'll take it from there. You're a funny guy. You're a funny guy. I'll see you guys all later. Hope you guys have a great day. Bye for now.